Dear students, in this video, we are going to understand theoretical aspects of the Module 3 subsidiary books. Subsidiary books are nothing but the subdivisions of journal. See, in the previous unit, Module 2, process of accounting, we have learned and understood the concept of conversion. I mean, a transaction has taken place. From the transaction with an evidence, okay, we convert the transaction into a journal entry. That journal entry will be later posted into a ledger. That ledger will be converted into a trial balance. From that trial balance, we do prepare the final accounts. Okay, so that final accounts will be discussed in the module 4 of your fundamentals of accounting subject. But in this unit, we are understanding the concept of subsidiary books and bank reconciliation. Okay, so the module 3 subsidiary books, here subsidiary books are nothing but the subdivision of journal. They are saying in the definition, if they ask you a question for a 2 marks, what is subsidiary book or what are subsidiary books, you have to give an explanation that subsidiary books are the subdivisions of a journal. These books are meant for recording transactions of a similar nature in a separate book. Here it means that subsidiary books are just the part subdivisions divisions of the journal books. Okay, journal book is a book where we record the journal entries from the transactions which has taken place, right? So the journal entries problems which we did in our previous chapter, the same thing we will be doing here, but the thing is that all the entries were recorded in a one particular book there, right, in the journal entries. But here we are not recording all the entries in a one book. We are subdividing those entries into a different books. That is, journal subdivision is nothing but subsidiary books. Here subsidiary books are not the ledger books. Okay, subsidiary books are not ledger books. It is the subdivision of journal book where we used to record the journal entries. Okay, so when there are many transactions, the journal is subdivided into subsidiary books to record such voluminous transactions and events in one single books. When the transactions are more, okay, if we keep recording those all the transaction in one particular journal book, it will be confusing and it will lead us to, oh, it creates a difficulty in searching any particular transaction in that particular journal. So keeping in mind the voluminous transactions which may take place in a single business every day, this subsidiaries books concepts has been introduced. These books are called special purpose books or special journals book or books of original, primary or prime entry. Okay, these are, we call subsidiary books as special purpose books, special journals, or books of original entry, books of prime entry, or books of primary entry. Okay, so this is what you have to write for the 2 marks question. What do you mean by subsidiary books? Next, let's understand these types of subsidiary books. Here you can see the types of subsidiary books are classified into day books, bill books, cash book, and journal prop. So here day-to-day books are nothing but the purchase books, sales book, purchase return book, and sales return book. See, one thing we should remember here, all the transactions relating to credit, credit transactions will be recorded in these books. Okay, all the credit transactions are recorded in these books, that is day books and bill books. Whereas all cash related transactions will be recorded in a cash book and a petty cash book, and whatever the remaining transactions relating to a miscellaneous expenses or anything, uh, that we will record in a journal proper. Okay, so here the books will be same, but we have just classified those books into day books, bill books, cash books and journal proper. Day books includes purchase books, sales book, purchase return book and sales return book. Bills book include bills receivable, bills payable book. Cash book includes cash books and petty cash book. Petty cash book is usually done in a small sole proprietorship businesses, where the business cash transactions are more and business is very small, and where it is very easy for maintaining and recording any kind of cash transactions. Next, journal proper is a book where all other transactions, excluding of all those transactions which are already recorded in these books, will be recorded in this journal proper. So let's understand each of these books properly. Purchase book. This book keeps a record of all the credit purchases of the goods. So here it is specifically mentioned that all the credit purchases which we have made, that is to business goods which we have purchased, okay, whether it's a manufacturing firm or a trading firm, if we have purchased the goods for the purpose of converting that goods into a final product and sell it in a market, or we have purchased the goods to sell it in a market, the whatever we are doing, we have purchased goods or raw materials for the purpose of business. Later we sell that goods in the market, that is what we call it as a business goods here. Okay, if we have purchased those business goods on credit basis, then we are recording all those transactions which were held during that accounting period in that purchase book. Here, purchase book or sales book, purchase returns book or sales returns book, what we have understood here, we have seen here, are not as same as the purchase account, sales account, purchase return account or sales return account. That is purchase account, sales return or purchase return account or whatever we have seen are ledgers. Okay, that are ledgers where we do debit or credit a transaction, and we show a double entry, means an single entry is hitting toward two different accounts, that we show it in that particular accounts. Okay, so that are purchase account, sales account, all those are different. Here we are speaking about purchase book, sales return books. All these books are the part of journal books. Okay, so when you do solve the problems, you will understand why do we call this as a part of journal books, and these are very easy to understand and to prepare. Okay, here in this unit a 12 marks compulsory question will be asked from preparing of this um, subsidiary books, and also a question from a bank reconciliation, also a question from a cash book. Okay, that could be a single column, double column or um, triple column cash book that we have to prepare. Here ultimately at least two questions of 12 marks and five marks, one or two questions can arise from this unit. Hence this unit is most important, keeping in your examination also in the mind. Also this unit is much important when you are learning the basic concepts of fundamentals of accounting, because fundamental of accounting itself says that if you don't understand basics of accounting, it is difficult to become an accountant in any company, or to understand the next level accounting concept which you may be learning in the upcoming semesters. Okay, so here let's continue with our purchase book concept. This book keeps a record of all the credit purchases of the goods made by the firm during the accounting period. For this purpose, purchases invoice acts as a base for recording the transactions. So whatever the purchases invoices we receive when we purchase any goods, that invoices will record as a basis for the transactions in the purchase book. Creditors account will be credited with the amount in the purchase book. However, credit purchases of the fixed assets are entered in the journal proper. See here, like I already said, purchases of business goods on credit basis only be recorded in a purchase book. Any asset which we purchased, okay, fixed asset, that we are not going to record in a purchase book. You know that why? See, as you know that when we are saying purchase goods on cash, okay, from Nitin, okay. So here, when we say that, you know that the journal entry for this is purchases account debtors to cash account. Though the name Nitin is mentioned there, we are not considering that because we have purchased the goods on a cash basis. You know that. So there is no need of recording the transaction in this purchase book. That transaction should be recorded in a cash book because we have purchased the goods from Nitin on cash. Okay, so that transaction should be recorded in a cash book. But if they say purchase goods from Nitin rupees 10,000, then we will understand this is a credit transaction and we have to record the entry here that Nitin, okay, Nitin's account rupees 10,000. Okay, date, invoice number, voucher number if it is there, ledger folio number, any detail. Relate detail here means if in case of number of units purchased into number of rupees, something like that, that detailed amount we have to write here, and the total of that amount should be written here. Okay, that we will understand when we do the practical problems. But here, purchase books record only the goods purchased, business goods purchased, which will be sold later in the market on a credit basis. Purchases on a credit basis should be recorded in a purchase book. If it is a fixed asset, machinery, or any other asset, land, building, furniture, pictures, anything, that should not be recorded in a purchase account. You know why? It is because that is relating to a fixed asset and that should be recorded in a journal proper. Okay, next is sales book. Sales book, this book keeps track of all the credit sales of goods made by the firm during the accounting period. So here it is again, they are clearly saying that sales book records the transactions relating to sales. If we have sold any goods in the market to any customer, okay, on a credit basis during that particular accounting period, that may be for a month, for a quarterly basis or off yearly basis or whatever, annual basis, whatever it is, that we have to record it in a sales book here. Okay, sales of goods on a credit basis, sales of goods on a credit basis during that accounting period, that should be recorded in a sales book. So here sales invoices form the base for recording the sales transaction. So here the invoices numbers and everything, whatever the details we will be recording, that will be based on the sales invoices. Or in the previous purchase books, it will be, it was about purchases invoices, right? So purchase invoices acts as a base for purchase books. For sales book, sales invoices acts as a base. That we need to understand and remember. The account of the debtor needs to be debited with the respective amount. So here the account of the debtor, if we assume we have sold goods to Mr. Mahesh on credit basis rupees 20,000, the Mahesh account needs to be written here with the detail and the amount of the 20,000 rupees. Okay, detail here means number of units sold, the price per unit, like that. The detail will be written here, the invoice number, the date, and ledger folio. Ledger folio is nothing but the that page number of that particular ledger. So account. Okay, next, credit sales of assets are entered in the journal proper. So here, if in case of assets are sold, like furniture is sold on a credit basis, that should be recorded in a journal proper, not in a sales book. So it is so clear that if you are purchasing or selling only business goods, okay, that may be in the form of inventory, stocks, or any goods, final goods, okay, that goods we are buying and selling it in the market, that is what we call it as a business goods. Only about those business goods purchases and sales, and plus or credit transactions only we are recording in the subsidiary books of purchases, sales. Okay, next, purchases return book. So here, purchases return, also called as return outward, means we had purchased the goods from Nitin, that we are returning back to him. Okay, because of any reason. Now, it keeps a record of the returns of the goods made to the supplier by the firm. Whatever the goods which we have return back to our suppliers, that we are recording in a purchase return book. Okay, on returning the goods to the supplier, the debit note is issued by the firm. So this is what we have to remember when we are dealing about the purchases book, purchases invoice, when we are dealing about the sales book, sales invoice. But when we are dealing about the purchase returns, a debit notes is issued by the firm, debtor or a buyer, to the supplier, creditor or the seller. Okay, so the debit note act as a base for recording the transaction. That debit note number should be recorded here. That like invoices given when purchasing or invoices given when selling, in the same way, a note, a debit note or a credit note issued will be issued when we do a purchase return or a sales return. Debit note is when we do a purchase return, credit note is when we do a sales return. Okay, so that we will understand later. First, concentrate on here. The debit note act as a base for recording the transactions in the purchase return book. For this purpose, a debit is made to the creditor's account with the respective amount. The total amount of this book is transferred to the credit of the purchase return ledger. So here we write the creditor's name here. Like for example, previously with an example, I had purchased the goods from Nitin worth rupees 10,000. Now I returned goods worth rupees 1,000 to Nitin. That I have to write here to Nitin's account the amount of 1,000 rupees. Okay, so next, it is to be kept in the mind that return of cash purchases should be entered in a cash book. If in case we have purchased the goods on cash, we are not recording that in a purchase book. In the same way, if we return the goods which we purchased on a cash, that also we should not record in a purchase return book. Here also only the credit purchases made, for that if we are returning the goods, then only we have to record the transaction. Example, I purchased goods from Nitin worth rupees 10,000. Okay, Nitin worth rupees 10,000 for credit. Okay, and now I am returning those goods to him, that is 1,000 rupees, 1,000, 1k. Okay, 1k worth. I purchased goods of 10k. Now I am returning goods of 1k to him. This is because of credit transaction. This also will be recorded in a purchase return book. This will be recorded in purchase book. This will be recorded in a purchase return book. If in case I purchase goods from Ram, that is for 15,000 rupees. Okay, I purchased goods from Ram for rupees 15,000 in cash. In cash. Okay, if in case of cash, if in Ram, okay, in case of cash, we are not recording this transaction in a purchase book. This transaction should be recorded in a cash book. And if I return those goods to Ram, okay, worth rupees 5,000 assume. This, since it is a cash transaction, and this should be recorded again in a cash book, not in a purchase return book. Now, sales return book. Sales return book is also known as a return inward book. So we have sold the goods, and because of some reason, the receiver, the purchaser of the goods, is returning those goods back to us. So here, sales return book is also known as a return inward book. This book maintains a record of goods returned by the customer that are sold by the firm. When the customer returns the goods to the firm, a credit note is issued to the customer, a buyer or a debtor. So whoever is a buyer or a debtor, to him, to that person, a credit note would be received, okay, by the firm. So these notes act as a basis for recording the transaction in the sales return book. So in for purchases book, purchase invoice; for sales book, sales invoice; for purchase return book, debit note; and for sales return book, credit note will act as a now basis for recording the transaction. So the debtor account is credited with the respective amount as written in mod, and the total amount of the goods return is posted to the debit of the sales return account. So previously I said with an example that I sold the goods to Mahesh worth rupees 20,000 on credit. Now if he is returning back a goods worth of 3,000 to us back, okay, so now we will issue him a credit note, and that we will record that 3,000 worth of goods are taken back from the Mahesh in the sales return book. Okay, so that is all about the purchase book, sales book, purchase return book, and sales return book. The further we will discuss in the next video. Thank you.